Hey guys, welcome to another video in this series. This series is called Basic Investment Terms. Today we're going to be looking at value investing. Now, value investing is when you're trying to target companies which the market has undervalued. So what you want to do is evaluate the intrinsic value of the company. And if that comes up higher to what the market has the company valued at, then that company is termed undervalued. And that is the company you want to choose to invest in. This is value investing. Value investing is trying to choose stocks that are on the cheap. All right. So you're trying to buy in to a bargain stock. Now, value investors, well, a perfect example of a value investor is Warren Buffett himself. He always tries to evaluate the intrinsic value of a company and see if that company is a bargain at that moment. If it is, he buys. If it's not, he doesn't buy. Period. As simple as that. Now, value investors tend to say that the market overreacts, so over fluctuates either upwards or downwards whenever there's news, whenever there are fluctuations in the market. So, and they say that it doesn't reflect the actual value and the long-term growth of the company. So if, for example, there's a bear market, there's a market crash, or the stock market goes plummeting down and everything drops 40%, look at the companies you've chosen. And if that company has a higher value than what it is valued at right now, so let's say a stock just went from $10 to $5 in a really big market crash. Did that intrinsic value actually change? Is that stock now actually worth $5, or is it still worth $10? Or is it worth even more, $10, $15, $20 per share? If so, that company is greatly undervalued, so it now presents as a huge bargain to you, and you're going to want to buy even more of that stock. So that is value investing. And now again, you can use a lot of things to try and figure out what the actual valuation of a company is, but that gets to be quite complicated. You can use low PE ratios, low PB ratios, high dividend yields, etc., to try and figure out what that company is worth and if that company is undervalued. Now, I've just made a video about a lot of good resources, good books that I use, and there's one called The Neatest Little Guide to Stock Market Investing, and the first chapter is all about evaluating the intrinsic value of a stock so that you can decide if it's undervalued, overvalued, or fairly valued, and decide if you want to invest in it. Now, in a nutshell, that is what value investing is, and in my opinion, it's a great way to invest, and everyone should try to figure out the underlying, the intrinsic value of every single company in which they invest, and they should never invest in an overvalued company, not for the long run anyways. So there's that. I hope you guys enjoyed this video. I hope it was useful to you. If it was, leave a comment down below. Let me know what you think. I've also gotten a new microphone. Let me know if the sound is better, if it's worse, if there's anything else I could change. Definitely keep me in touch. I'm willing to do whatever it takes to make the videos better. Don't forget to subscribe so you don't miss any upcoming videos, and for those who want to be notified as soon as a video comes out, don't forget to check out my Twitter. Thanks guys, have a good one.